This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, June 15th, 2016. Euro dollar. So the euro is gravitating back towards some key support at 110.98 with a break below that level to open the door for deeper setbacks, exposing next key critical medium-term support at 108.23. But until that 110.98 level is broken, we can't rule out the possibility for more choppy trade and the potential for another shot at the top side. But right now, again, the focus is on the downside with a potential break of 110.98, with rally seen well capped towards that recent high at 114.16. Ultimately, only a break back above 114.16 would compromise the newly adopted bearish outlook and put the pressure back on that 2016 high at 116.17. Sterling dollar. So cable remains under pressure after recently taking out some key support around the 143 area, with the focus now on a retest of that critical low at 140.05 going back to the 6th of April. A break below that 140.05 level would then of course expose the critical support in the form of the multi-year low from earlier this year at 138.36. At this point, rally should be very well capped ahead of 143, with only a break back above that level to delay the bearish outlook. Dollar yen. So dollar yen remains under pressure with the downtrend here firmly intact, and the market now looking to take out some recent support in the form of the multi-month and yearly low at 105.55. A break below that level could open the door for a more intensified acceleration to the downside towards that 100 level, while inability to take out 105.55 would open the door for the possibility of a bit of a bounce. But ultimately, the market, while it trades below that 111.89 previous lower top, does remain confined to a downtrend, with any rally seen well capped ahead of 108. Euro Swiss. So Euro Swiss has come back under some intense pressure over the past several sessions, with the market breaking down now to a fresh 2016 low. At this point, there's some critical support which comes in around the 108 area and then down towards 107. Ultimately, if the market can hold around 108, we could see another significant bounce back towards the range highs, while if the market establishes back below 108, it will open the door for more significant retest of that key support going back to the August of 2015 at 107.13. Aussie dollar. So Aussie has come back under pressure in recent trade, though setbacks have been mildly supported, with the market looking for some form of a consolidation. Overall, the downtrend or the focus to the downside remains intact, with any rally seen well capped up towards that 61.8% fib retracement at 75.70 in favor of the next major downside extension below 71.45 and back towards the 2016 base at 68.27 further down. Dollar CAD. So dollar CAD continues to show evidence of a major base after stalling out ahead of that critical 2016 base at 24.61. Look for the higher low to be now in place at 26.55, with confirmation to be given on a break back above 131.89, which would open the door for fresh upside towards the 135 to 140 area. Kiwi dollar. So Kiwi looks to be under pressure in recent trade after stalling out by 2016 highs at 71.48. This opens the door for additional setbacks in the sessions ahead, though the market will need to establish a break back below the low that we saw from today at 69.63 to get the pressure focused back on the downside and really accelerate declines. Until then, there is still risk for another shot at the top side, but ultimately any rally should be very well capped back towards the 71.50 area and ahead of 72. SPX 500. The S&P 500 has come back under pressure in recent trade after once again stalling out above 2100 and ahead of that record high from 2015 at 2133. This sets the stage for the next downside extension towards next key medium-term support in the 2020 area, and a break below there would be required to officially shift the structure and truly accelerate declines. Inability to take out 2020 will keep the more immediate pressure on the top side, with the potential for another shot above 2120 high, above 2121, the 2016 high, and towards the record peak at 2133. Gold. So gold continues to consolidate in bullish fashion, with the market ultimately expected to break above the 2015 peak at 1307 and head towards the next major upside target of 1400 further up. At this point, any setback should be very well supported ahead of 1200, with only a break back below 1191 to compromise the bullish outlook for gold.